This is London with Bitcoin Spike and VIP Trader. Hope you're having a good midweek FOMC meeting. Minutes coming in today. We're going to look at Bitcoin. I want to talk about something very important today, your indicators. Now, not just our special built indicator that caught the bottom of Bitcoin. I want to talk about relative strength index. I want to talk about stochastics. I want to talk about your MACD. And I want to give you a guideline and a principle when you may be frustrated looking at your technical indicators and saying they're not working. The indicators aren't working. I can't trade with these indicators. I want to help refine the approach that you're looking at today in terms of your trade tactics and see if we can approach your indicators, okay, in terms of your utility, the utility they present to you with a little bit more fine-grained detail in terms of how you might be able to capture some additional trades. This is London, former hedge fund owner, private, non-SEC, not financial advice, taking a look at our setup. We welcome anyone who wants to beat the market. What makes us the best trade group? The best trade group is made up of me, and it's made up of you. We want people who want to beat the market, bottom line. And we are excited to deliver this message, which will be relied upon in the future in terms of our training with indicators overall. Now, what is an indicator? Okay, an indicator can be either, as you all probably know, a purchase for, let's say a purchase. And as we look at the details on Bitcoin, you'll see the bottom right. You will see a bit of a, let's say, lack of strength by the bulls in this area. I don't want to focus as much on the price action of, let's say, Bitcoin today. Right now, immediately, we can go over the patterns. We have resources. Definitely, we've utilized those resources in the back with our trade group, and you're more than welcome to join our trade group in the back. We're fully aware of the moves that are ongoing. What I would like to say is an indicator. What is the utility of an indicator? Now, an indicator could be something that's paid for, designed for traders. For instance, let's say someone has put together an indicator with buy and sell demarcations all over the map. You may look at it and say, well, there's indications to buy, there's indications to sell all over the map. That's all over the charts. That's what I want. I want the indicator to do the work for me. That is going to be, I would say, the danger zone. As you look at your evaluation of any indicator, pay attention, please. Please pay attention. And that's the purpose of the day, is to help you look at your usage of indicators. I'm going to say from a higher tier. As you would look at, let's say, anything that could assist you in entering or exiting the markets, okay? The easiest thing to do as a trader is say, I want an across the board answer. I want the answer presented to me on every time frame so that it requires no work from me. And this isn't a big lesson of today about work, about the amount of work you need to put in to beat the market. That's not what we're looking at. What we're going to be talking about, rather, is the appropriate way to use the indicators, okay? Whether or not it's relative strength index, whether or not it's stochastics, whether or not it's MACD, whether or not it's even, let's say, even a Bollinger Band, right? Even a Bollinger Band trading over or under the 20 moving average. And good morning to all of our VIP. I did a test stream just to make sure that we were up and running. We have some new weather in the works and some new connectivity as well. So we are up and going. Now, as we were to look at the utility of an indicator, the utility of an indicator, as you would look at, for instance, and this is what I want to bring to you all, as you would look at, let's say you want the solution, right? It's human nature. We want the problem solved, right? There's a problem. Let's say your problem would be, and guys, the problem may stem from. It may stem from your lack of ability to pay attention to the markets. You can't put in the hour, 2 hour, maybe 3 hours required to really set up all your time frames. That may be a fact of life for you. That's not abnormal for traders to struggle with that challenge. So the quick, easy fix would be an indicator. Let's say an RSI, real simple, a relative strength index that shows you overbought or oversold. We want to know when there's too much selling pressure, it's time to buy, or when there's too much buying pressure, it's time to sell. Typically, just say that's a quick and easy fix. Now, what traders rarely do, and I've worked with a lot of traders, guys, in terms of that, what traders rarely do is apply their indicator. And I'll just tell you, because the vast majority of times, what will you do, for instance, and as you evaluate an indicator, you're all going to say, that's right, that's true. The first thing that traders would do on an indicator. Please pay attention. Please pay attention. Hope you guys are doing well. You may have, let's say, an indicator that's going to tell you to buy right there. All right. The trader looks at the indicator and says, yes, it's working. It's working. And you have the indicator right here. You'll do your visual inspection and say, yes, it's working. Okay, I can rely on this. Buy, then I see the sell. That's great. That's something I can rely upon. And please pay attention. You may have the indicator, though, that told you to buy right here. The indicator told you to buy right here. You would immediately discount that indicator and say, no, that's not going to work. It's got a 1 out of 3. I have to be careful with this indicator, right? Now, these would be buy and sell signals, right? We would prefer that to be buy low, right? And we would prefer to see the sell high, right? And when you see this compliance, when you see the technical conformance in line with the price action of an indicator, you say, wow, that's for me. That's going to do the work that I would like it to do, right? Instead of me having to do all of the work. The notion this morning is that you're going to have to do some of the work, all right? The notion this morning is that if you're looking to up your percentage of trades in terms of, let's say that you're looking to hit at 60, 70, 80% of your trades, right? Your indicators, and as you would look at our Z-Pack, or you would look at, guys, look at your RSI, look at your MACD, what is going to be crucially relevant? First of all, is your designation of patterns that are in play, okay? And now this would be one step that beyond just your visual inspection of a indicator, you're looking at a pattern that is in play, and thereafter really deciding, and we're looking at some nice price action on Bitcoin to the downside, 2.96% to the downside. We did talk about this specific breach of that ascending triangle, just so that we kind of update here, and that's proving to be kind of a sticky issue for the bulls. We have that double top right there with the flat. Anytime that you see an M top formation, go ahead and identify that with your amplitude target to the downside, and that, I'd say, that tendency of Bitcoin or any coin or asset to pick up at that specific preceding pivot, right? So you want to pay attention to that. And I think there's a lot of frustration in the market with the traders. I know that there is, in terms of the levels of consistency of the information that you're able to receive in the markets, the level of consistency of the signals that you're going to receive in the markets. What is the real prime solution to that? What is going to be the key differentiator between you and the next guy? I'm going to tell you guys, the next guy is the guy that wants the easy answer, is the bottom line, and you can only get so many easy answers throughout the day. You guys know this, and it's not a popular thing to say. Is, well, you know, you're not going to get the easy answer. And I'll say this, you'll get the easy answer, but it literally is going to require maybe you turning to one page in your mental book and taking one more step in the equation. Can we take, let's say, well, we're overbought or we're oversold, or we could be at a midline function in terms of, let's say, an RSI stochastic equivalent. We could be at kind of an average function here. What would be important would be not just receiving the information from the indicator, and as you progress on your different time frames, as you look at your levels of consistency and evaluate, whether it be on let's say a visual basis, and you're evaluating the validity of an indicator that you're going to use or not, even if it's, guys, a built-in RSI or a MACD, when you're evaluating that, we have such a resistance towards evaluating that in context. Okay, most traders will look at the indicator. If it's, say, let's just say this, it would be an RSI indicator. They would look at an RSI indicator and say, well, how many times did we get to oversold or overbought, and did it result in a positive trade? That's going to be it. Or did it move against the trader? That's going to be it. That's the majority of the market's going to do that work. They're going to evaluate it on a visual basis, and that's it, in a vacuum, essentially. They want to take the indicator, they want to evaluate it in a vacuum, and they're going to assess the validity and the value of the indicator in a vacuum. Now, today, I literally just wanted to come to you and talk about the fact that if you will, if you will take the next step in the equation. And it's very difficult to do when you have, let's say, an indicator that is operating. When you have an indicator that's operating and you have touch points, for instance, in a potential sell level, potential buy level, be it MACD, RSI, stochastics, be it anything. What I'm going to say is that your indicator needs to be judged not in a vacuum, in a sole, and guys, the traders that I see that are able to incorporate and take this to the next level are the traders that do well. And I'm not talking about they show up on this month or that month and they do well. Yay, they got a big trade. Yay. No, I'm talking about traders who can consistently double accounts. Consistently double accounts. Consistently booking 4 and 5 trades in a row. Consistently, not like the guy or girl who wants the quick, easy answer. Hey, I see traders consistently who can double accounts, right? In terms of that, I always say that's one of the bad habits, right? One of my bad habits is I can double an account. Right, you don't want to double it too quickly. Is the bottom line. Don't put yourself on the radar with the exchanges. That can also be an issue. But what I'll say is, as tongue-in-cheek, a little bit of a joke, when you're looking at your indicators, when you're assessing, we do the visual assessment. You guys know whether or not it says buy and sell on your screen, right? Always put the buy and the sell, whether or not it's a literal buy and sell on the screen. I mean this, guys. Whether or not it's a literal, you're looking at an indicator and you've assessed it, and this is the easy way out of the market. Even your easy way out of the market is going to be what, guys? Is going to be literally, guys, it's going to be deficient unless you are able to recognize your pattern parameters. You guys know this without a doubt. If and when you can, and this is really, because I woke up this morning, I'm like, what do the VIP need to hear? And I know you guys need to hear this, is when you're looking for the consistency, you're looking for the consistent trades, be it in RSI or be it in your stochastic, be it in your MACD, right? You're looking for that key focal that you can always rely upon that has shown itself and back tested well. I'm just going to tell you, there's another 20, 30% in terms of your trade returns. Even if you say, no, I already have it. I already found it. Guys, the best traders are incorporating their specific indicators, whatever that may be. You may have a special guru indicator that is just a buy and sell every time and it's perfect. Even if you have that, you still have another 20, 30% that you can dig into and you can optimize, yes, on the larger time frames, digging into the micro and smaller time frames. This is where things become interesting because you can have, you guys know this, but you can have, for instance, either a bullish or bearish pattern on the larger time frames. Right? The traders who are capturing that 20 to 30 extra percent are consistently able to incorporate the larger time frames down into the smaller time frames and maintain relevance of the accompanying transitional time frames from that larger time frame down to the lower time frame. You guys agree or you disagree? The best traders are consistently able to incorporate the higher time frame, let's say the 8-hourly or the daily, right, or the weekly even, right, more so the daily. They're consistently able to incorporate that larger time frame down on into, let's say, the 30-second. Guys, the 30-second or the 1-minute time frame. Now, why would a trader who has a clear signal from whichever indicator you choose, if it's a standard indicator, RSI, if it's an incorporation of, let's say, RSI, MACD, stochastics like ours, and momentum, RSI, stochastic, momentum, and really I should say Bollinger with that 20 moving average correction on our Z-Pack. The point is this: when you are incorporating the larger time frames down into your lower time frames, yes, and even on the lower time frames, you are able to capture, right, not just the larger time frame, but even the probability sets, and you guys know the specific probability differentials in that lower time frame. Your success rate goes up. And it's not a blind. You've got to incorporate the pattern differentials in terms of your usage of any indicator. I'm just going to say any indicator. And it's almost, I won't say unfair, but it's a very clear trap that traders get into. And I think if you trade enough and you've evaluated any type of indicator, and guys, if you've evaluated the RSI, an oscillator, if you've evaluated the MACD, if you have evaluated, and how many of us do this? How many of us do this on MACD? Hello, good morning, VIP. How many of us look at the MACD and say, it just look how inconsistent it is. It's just not working. Hello. We want a quick, easy answer. We want the MACD to incorporate all of our guys, all of the price action. That's just it. We don't want to have to do a pattern analysis, and then look at the MACD. And you understand that. How few times do you as a trader, and this is just a challenge as you're working forward in your trade games, good stuff, as you're working forward in your trade game and you're looking at MACD, how many of you have an answer as to, how many of us have an answer as to, well, the MACD when we're in a bullish pattern has been 100% on every time frame except the 30-minute. When we're in a bullish pattern, or the MACD has been 100% over the last 200 bars or time increments when we've been in a bearish pattern in the bearish market. We don't go there, do we? So what I'm going to suggest, given the fact, and that could be a ton of work, that could be a corner floor in a high building in around Wall Street, right, of work to put forth. But what I'm going to encourage you, and it really was just on my chest today to bring this to you. And I'll refer this to, I know that Flaz is starting 100 rounds. Flaz, hey, shout out to Australia. How are you doing, Flaz? I'm excited that you're getting into 100 rounds. As we talk about your 100 rounds in your training, right? Flaz, we could go put up 20 billboards tomorrow. We fill the rooms with traders that want a quick, easy answer. It's not what I want to deliver to the VIP. I wanted to deliver to VIP, and guys, let's just get excited for Flaz. He's from Australia with Chris, and shout out to Chris. I wanted it to be a bit of a meaningful just stream. Yes, New York's open. It's about flat until we get the FOMC meeting. Yes, last night's video just about covered our breakdown from the ascending triangle, and we've got the guys. We go through the technicals, no problem. But Flaz, for you, I wanted just to start as you're getting into your 100 rounds training, and that's our day trader training. And it's applicable to all of us. But as you visualize and look for your next trade, never do so just on the, I say on the blind. When you would look at, let's say we're hunting for a day trade. And the good thing about 100 rounds or your training is that you get to experiment a bit. Take a look at this. You get to experiment a bit with your indicator sets and whether it be RSI or stochastics, as you look at the difference between stochastics and RSI. Stochastics are a derivative of RSI, buying and selling pressure. More frequency in stochastics. You're going to get more trades on stochastics. Same overbought, oversold principle idea. Bulls are in charge, they've overperformed. Bears are in charge, they've overperformed. Reversal potential versus a continuation, reversal versus continuation. As you talk about the minds that there are, the authorities in TA, you're going to be looking at that question. Is it a momentum indicator, meaning we're going to see a progression and continuation? Let's say overbought means the bulls have taken control, we can expect more buying pressure, versus the reversal situation. Now, as you get into the levels of uncertainty, even with that specific issue in mind, what is the follow-up, immediate required answer for us as traders? Okay, let's say I have a hit into overbought or oversold territory. That's the bottom line. Can I rely upon that signal from the indicator? What do we need to get to immediately? Patterns in play. What patterns are in play? Am I at a line of support? Am I at a line of resistance? Which patterns are going to guide you through that question? Very important, guys, that just this morning as Flaz is starting his 100 rounds, we're looking for great things from you, Flaz. We're excited about that. But I just wanted to bring this notion to bear as we were to talk about, yes, the indicator is important, but even more important would be the layover of your patterns so that when we see from now on, and this is a challenge to us as VIP, this is a challenge to us in our group, is literally the fact that, like, well, MACD has been miserable on this time frame. But how many times has MACD, let's say, been divergent from price action based upon a divergence, or let's say during a bear market, well, it was actually a bullish structure? Issues like this in terms of which specific pattern you find yourself in and what type of signals you're getting, right? It's like, well, we're in a monster bear pattern, but we're getting a huge buying signal. Just focusing on, first of all, the overall macro, if you'll just pay attention to this, macro situation, meaning, and if you have mixed signals, understand you have mixed signals, right? It's a great example right now of mixed signals. And shout out to the VIP. Good morning. I hope you're all doing well. We're going over the importance of your indicators today, how to appropriately gauge them, right? How to work in your pattern dynamics to your indicators, right? We have, for instance, here, it has been nice. Would you mix in fundamentals? Yeah, you would. Huh? Mix in fundamentals at some point. You would say, and shout out to Venus. I got word from Venus yesterday afternoon. I think she shorted like 8 times. She shorted 8 different times into the 200 weekly moving average. An average that we identified early. Just beautifully well done. Very nice trading, Venus. As we would look at, for instance, let's say, and this is the difficulty. The difficulty would be the following as you look at your indicators. The difficulty is going to be the following, right? You're going to find a time frame that's going to tell you to buy. You're most likely going to find a time frame that's going to tell you to buy. Yes, you will. You will, as a matter of fact. What you need to do is be able to not only backtest or gauge that specific indicator, whichever indicator or oscillator it may be. If you're looking at your relative strength, if you're looking at your MACD or your all-in-one that we have, the Z-Pack, the relevance is going to be the following. This is just a great example. Let's take this into let's take this into account on our Z-Pack, for instance. Let's look at the Z-Pack, the hit down into a standard deviation past that 1.5, about the 1.5, a level consistent across the way here on the, let's just say the 8 hourly. It could be any time frame, guys. But looking at this floor, we see quite a few hits here. Pay attention. And Flaz, I'm excited about your training again, my guy. What's going on? As we would look at this, and if it's too late in Australia, we look forward to you viewing this tomorrow, and it's hugely relevant to all the VIP. As we would look at the hits into, let's just, guys, into a potential pickup zone here on the 8 hourly. We can shift to any time frame. Into a pickup zone, into a pickup zone, into a pickup zone. All right, missing a few pickup zones, needing to play a little more aggressively here. Light pickup zone, looking at price action relative to these pickup zones. And we're going to be a little bit, we should probably have 2 lines here. But the important fact is this, as you were to look at an internal and external, we'll just say an internal and external potential pickup zone here, and there is enough already, I'd say naturally drawn into our Z-Pack on the 8 hourly. Not sure I would focus on the 8 hourly, it's a sheer example. We could switch to the 4 hourly without a doubt. But what's relevant is, for instance, as we came into and really past the preceding pickup levels here on our capital line. It's called the capital line because I like the notion that when it turns red that you're prepared with capital behind. It's just an idea. It's not a financial advice, and guys, you know that. I mean, it's Bitcoin. It's not a security. So to the extent that that is relevant, what I'll say is what is relevant is the following. As we were to look at the pickup in this zone, and you guys know we identified this specific potential pickup in the market early. Now, the fact that we had a parallel drawdown in the market, you guys know this, the fact that we had a potential pickup at a parallel drawdown in the market, which I identified it, I said that would be the top level of bulls, okay? The most aggressive level of bulls would carry down a level of resistance to support. Okay, the fact that there is a potential pickup in the market in this zone, as identified and reinforced by your indicator, does what? Now, it looks very easy now, but none of this was here, right? We were down in a potential pickup area here, but we had a technical pattern reinforcement, right? A classical technical pattern reinforcement that could and did highly suggest that we should be very involved in this level at a lower time frame. right? This is the 8 hourly. This is the macro. As we look at either the daily or that 8 hourly, the fact that we are along a level of pickup could even, as you gauge your expectations at a pickup, let's say a variable level of pickup on your indicator, and you can look at this on the RSI. A lot of variable pickup on that hourly time frame. Have you seen the hourly on the RSI? Let's go ahead and look at this RSI. Let's look at the relative strength index on let's look at the hourly. I just want to prove this point to you. As you're looking for, and you say, well, London, the RSI hasn't been working. It just hasn't been working on Bitcoin. It's been very difficult. My RSI hasn't been working. Okay. Well, your RSI has been working, but it hasn't been getting down to, on the hourly, for instance, down into that sacred turf of oversold. So you would say, yeah, it hasn't been working. Well, it's actually been working just fine within the pattern conformance, just as I constructed in the circumstance of the situation within the larger time frame on the 8 hourly pickup. The pattern dynamics that are in play right now have justified an entry and an investigation into, let's say, this specific level here and around this 34. Now, it's had pattern conformance and a level of consistency at not 30, guys, not the 30, typically the oversold, but at the 33. Now, within these pickups, you're going to find it expressed within the patterns that are engaging the traders up and above the 30. So if and when it be the case that the traders are waiting for that oversold condition on the RSI, on the hourly, well, you didn't get it. Well, you didn't get it. Well, you didn't get it. Well, you're going to get it. I'm going to tell you this. As you look at, and it's a great example that, well, I'm waiting for my indicator to work. If you're waiting in a vacuum and you're not plugged into the patterns that are in play, and you guys know in the back we're very plugged into the patterns that are in play, then you're going to feel left wanting in the markets. You're going to feel left looking and hunting throughout your time frames and saying, well, this isn't working here. It's working just fine. Okay, the indicator's working just fine. There's just a different technical interplay between the, let's say, the patterns that are in play, and we don't need to necessarily digest all the patterns in play here. We can spend time. It's not a pattern tutorial, but I think from the larger time frame, we are, and you guys have been in the back, you've seen the depth and the detail, and I don't want to scare away anybody. Honestly, I don't want to scare away anyone in terms of the pattern detail that's required. But as we would also look at, and it can be not light work. You guys know in the back we're consistently generating a lot of heavy, detailed, somewhat sophisticated pattern work in the back. That's all gold. It's literally all gold. How many times have we been in a pattern framework here, maybe on a different time frame? You know, and you may get into a different time frame where you look at, for instance, well, how would we even pick up a pattern like that on the hourly? We'll get into it on let's say the 5 minute. Well, we had a descending triangle here, right? We had an expectation of a pickup underneath. Buyers get very interested underneath. You guys know this. We call it a blackjack move, without a doubt. We have that double bottom. And the blackjack comes from this notion here. We have the double bottom with the single pass through bottom line. So as we were to look at the specific technical indications beyond just a blind adherence to the hourly, this whole notion this morning that I really want to reinforce is, if you're using your indicator, awesome. And is this relevant for divergences? Oh my gosh, is this relevant for divergences? Oh my gosh, there's 20 to 30% more that you're looking for in terms of booking your trades, that success rate, your hit rate on trades. That 20 to 30% extra is literally going to be defined by, guys, in large part, how well you're able to incorporate your pattern probabilities in with your your indicators, okay, or in with your divergences. Do you know which ones to ignore? Because I'm going to tell you, I'll promise you this. You're going to get into a situation where the hourly has hit, or the 5 minutes. I mean, the relative strength index has hit every single time into oversold, and it's provided great trade opportunities. Okay, great. You're going to get into a position where the relative strength index goes down below, guys, deep down into the basement, bottom floor on the elevator, and it's going to push down into the 5-minute. If you're not plugged into your specific patterns on the macro, if you're operating in a vacuum and you're just tunnel vision on into that 5-minute, it just could hurt. All right, you could get into a position where operating in a void, in a vacuum, on your indicators, you're not gonna attain alpha. What is alpha, guys? In the market, it's not a shirt or a hat or anything saying you're number one. Alpha is the percentage by which you beat the market, bottom line. So this is just the challenge for this morning as you look into and as we assess. And it's, guys, the market's going to be challenging. It just is. It's built to be challenging. But when you catch good moves, normally you're going to do that by incorporating your oscillators. Yes, by incorporating your pattern dynamics. I want you to know, I mean, are we in a position like here, as we were to look at? Well, we had a technical bullish expression. Right? We did have a technical bullish expression. We still do. We have an expansion pattern that's coming out of a failed bullish scenario with this ascending triangulation. Does that give you a bit of pause here on this specific bullish pattern framework? Yeah, it does. You know you're fighting against a breakdown in the market. One being that ascending triangle, right? You know also two being that double top, right? In terms of that double top, what would be the expectation of that? Let's see here, as we were to measure this to the downside, typical expectation. And I just say three, the tendency to pick up at a pre-existing pivot in the market. So yes, you have a bullish expression here, but knowing when you have a bullish pattern that seems really uncontroverted, there's really no contesting, let's say, a bullish pattern potential reversal play versus a bullish pattern that is in the mix that's fighting a 1, 2, 3 onslaught from the bears. It's like, well, okay, be it the tendency to pick up at the prior, be it the flat, let's say flat bottom support or break threshold of the double top, or be it that ascending triangulation here. You've got to be able to assess that, and the best traders can and will continue to do it. This is not light loaded information for the quick and easy answer crowd. You guys know that. That's not what's going to make you great in the market. I see people all the time, VIP, who are operating extremely well at extremely high levels in the market. It's not with the quick and easy answer. Even if, guys, I'm going to say even when, you guys know this, and it brings into context the indicators. It brings into context the ones you use, or you don't tell anyone that you use, whatever it may be, guys. As you were to look at and assess your buy and sell, let's call them facilitators, right? You have some facilitators in the market. You have some facilitating, and guys, just pay attention, because we're all about facilitating entries on the 4-hourly, let's say. Been very consistent, right? We're pouring down through a specific buy line. Right now on our 4-hourly, those have been very consistent. The degree to which you will rely upon any buy or sell indicator in the market, any buy and sell indicator. Will it be a brief interruption trade? Like, man, at 100x, I got a 20% trade on that. That was it. Or will it be a long-standing, bam, power into it? And I'm expecting this trade and this signal to last, let's say on this specific 4-hourly. It was either a hit and quit. It was a Jackie Chan, you better have quick hands moment. Trade lasted 20, 30, 40 seconds, right? Or maybe a number of minutes, maybe a number of hours. Or will it be a long-term hold into a situation? Right? You may have a different expectation on any indicator you use, whether or not it be a RSI, whether or not it be your MACD. You may have a great expectation of holding it for a number of days. You literally may look at it and say, you know, we got into a 4-hour signal to the upside on fire and ice, or on your RSI, and on RSI. Let's talk about equivalence, right? Or talk about confirmation across multiple indicators. Now you're talking, right? As you would look at that, You may literally say this would be an ideal time to pick up, to hold into this circumstance and potential price action to the upside. You're looking at this specific situation and saying, yeah, this is worth holding on into a number of days or possible weeks in the market. Extremely important that you do this differentiation, and honestly, to let you guys know and appreciate your time, because you're not the quick and easy crowd. You're just not. You're the VIP, and I know that you're in this for a level of success beyond that which probably, I'm going to say this, beyond that which you've probably even really seen, right? I hope that you're looking at your involvement in the market as being successful beyond what you've really even been shown to date. I hope you literally have it lined out to where you want to be the number one of anybody that you've met. Maybe you've been around a lot of pro traders. You want to beat all of them. I hope that is the mindset and mentality that you bring into the game. And I just want your pattern expectations to guide and those probabilities to guide your participation in the market. And I want you to blend in from the larger time frames, scoping down into the lower time frames, and be able to create that synergy. We'll continue to do some work on this specific issue of, I'd say, incorporating, right? If you're doing swing trades, right, incorporating in the indicator, right, whether it be our indicator guys or if you choose to rely on RSI or otherwise. But when would these specific indications of, let's say, a bearish threshold or a bullish threshold being relevant? When would, if this were just a flat RSI, as you see here on the top of your screen? Yes, it is. It is. That is the RSI. Just look a little closer. Looking at the framework of the, let's say, the entrance potential of your capital line across the bottom. When would this become more relevant? When the technical expression across the top is indicative of the fact that we are on a level of support. And I'm going to tell you, you can challenge this notion with your classic MACD. You can challenge it and look at it and say, well, MACD is just not working. MACD is not working on this time frame. It just doesn't work. As we look at the patterns in play, assess your indicators always. And this is just the message I wanted to bring because I know Falaz is starting his trading. Hey, Falaz, we're excited about that. VIP, you need to be hyped. We got to support Falaz. He's getting into 100 rounds. 100 rounds is our day trader training program. It's been hugely successful. You have no idea how successful. Isn't that nice? I do. And you guys do to an extent as well. So as you would look at the participation on the different time frames, I want you to just course and scope in on not just blindly relying upon, well, a standard deviation level's been hit on our Z-Pack or on the RSI. Now, I want you to blend that in. You may even say on your RSI, well, RSI's underneath, just gone underneath its own moving average. You may say there's been a crossover. How many times do you guys see a blind cross on a MACD as a power signal to the market? I mean, wouldn't you say, wait, whoa, power signal in the market is trying to battle right now, is trying to battle a bearish pattern, right? Yes, so to the extent that you can validate or invalidate a signal on any of your indicators, the ones who can synchronize, who can read the chapters in context and not a page or a paragraph out of the book and be like, oh, I found a problem or I found a solution. Read the book in context. Read the technicals in context and the ones that can parse through that, and let that be your challenge today. And I'll say the challenge will include when you're able to see differential parameters, when you're able to see a split in the market. Know that you have a split in the market. Know that you have a fight between the bulls and the bears. And I'll just say, as you would look at the ability, your ability to participate in the market, know when it's uncontroverted or less controverted. Know when there's more fight against you in the position you're taking in a long or a short. On the long are the bears there? Are you in a pattern where the bears are there? Right? I'm going to say, are you at a level on the 200 weekly? Well, that's a key level of prior support throughout the entirety of Bitcoin. right? As you would look at the mechanisms in play, know when you have an open field to play with. We got to go play pass. We're gonna take the football. Let's go out on the field and let's go play. There's nobody out there today. Let's go run some scrimmage. Let's go run some patterns. It's you and me, guy. It's just you and me. As strong as my arm is, and as strong as you can get your foot and your hands around the field and turn around and catch the ball. Literally, let's roll. Let's get out to the field. It's perfect. Or no, man, this place is like it's like Armageddon out there. It's field day. The kids are all over the place. They literally let the middle school out through the high school kids. They're running around. It's an awful day for us to go practice patterns on the field. You guys get it? There's a little bit of a difference. It's you and me, kid. You and I are going out to the field, right? Let's go pick up a football. We're going to go out there and boom. I'm going to hit every pattern. There's nobody else out on the field. We have it all to ourselves. That's a nice way to play ball, right? That's a nice way to work on your skill set versus, oh man, it's field day. Imagine the level of conflict, the inability of you to actually deploy your skill set just out, anything you want on your own day, on your own field, just the literal blue sky above, right? Don't let the sunshine get in your eye. That's the only thing. Know when you're at that in terms of your participation in the market. Man, this is like a clear day on the football field. It is just you and me. I got the football. You got the hands and the legs. Go run your patterns. Wham! All day long. Those specific opportunities, recognize them in the market and be like, well, that's kind of like what London's talking about. Yeah, that's one of these days on the football field. Everything clear. Whatever pattern you want to run, let's run it. Yeah, how do you get around this one? Where's the sweet spot on that one? Versus, man, look at the field today. Imagine looking at the football field. In the analogy between you and me being on the field, hey, we got it. A QB and a wide receiver running routes, boom, all day long with the blue sky above. Beautiful, beautiful. Where's the sweet spot? Where's the cut on this pattern? Hey, every pattern's got its own little detail, right? When you're in a congestion area, congestion zone, you want to go run patterns? You want to go run detail on guys? You get the example, huh? It's completely out of control. You need to know when you have some conflict set up between the patterns that even you like to trade, that you like to run. You guys got it? Are there mixed signals here? Is the field's full? Hey, coach, the field is full. We can't go out there today. Understand when you have clean patterns, when you have the ability to run your clean patterns, guys. That's very important for me as you guys look to beat the market. And it takes some patience. It does, and you may find that you're in kind of this, hold on, we're breaking down from an ascending triangle. The bulls are failing, and then we have this bullish pickup pattern here. Should it give you pause? There's a little congestion on the field, right? How many of these specific patterns have we had? And guys, this is a pattern that's a 72% boom to the upside. You got it, 72% to the upside. 72% of the time on this specific expansion pattern, we're going to see it break the level of resistance. It's been nearly perfect in the entirety of this zone. But we have a major break in a typically bullish pattern along a primary level of resistance. And the context is this, guys. The context that I provide is like, well, it seems like you're getting wishy-washy. Not at all. 72% of the time, 72% of the time, we break this level of resistance. And you guys know it's been just like, it's been paying, it's been nice. These expansions have been paying, but it looks like in the context of a potential failure by the bulls that at least you need to be prepared for a pickup at preceding level of support and a pickup at a preceding level of support. So as you gauge your 72%, as you gauge your, high five, perfect pattern, perfect everything, we're out on the field. It's just you and me, kid. I got the ball. You run the route. Wham, boom. Touchdown every time. Touchdown every time. This is like magic. Nobody on the field. It's like payday every time. Versus, hey, we got some other cats on the football field. Hold on, guys. Hold on. I know you like to run this route. I know it's a perfect pattern for you and me. I can square back. I can throw this 65 yards literally for a perfect touchdown every single time. Literally every time on the football field. versus, whoa, 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 we got some other clowns on the football field, guys. Hold on, hold on. I know you like this pattern. I know we want the blue skies above and just you and me on the football field all day long. I'm going to drop back here. I'm going to launch this thing 65 yards. Just understand, we got some different cats on the. We got some different guys on the football field today that are out there scrimmaging, playing, and so in terms of whether or not it's going to be clean sailing, please make the assessment in terms of the analogy as to whether or not it's just you and me on the football field. We're going to be dropping back, boom, 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 boom. I'm going to be seeing you run your pattern, that 72% pattern that has been printing and minting cash the whole time. You need to do the assessment. I throw the ball 65 yards down the football field, and you need to get through all this congestion to go pick up. A little bit different of a scenario than if we're in an uncontested match. Now, you may not like that because it costs you time. In the market, it costs you time. It's like, I showed up here. I'm on the football field, coach. I'm going to go run my pattern. I'm going to do my job. I'm going to go run my pattern on the football field. 72% of the time, this pattern's going to launch to the upside. I'm going to make money. I showed up in the market to make money. Okay. The market's going to require you to be a bit patient at times. At least do the assessment of whether or not, as you look at Bitcoin right now in the 30-minute time frame, you got a flat top resistance. Understand that you may be clear sailing while you're looking at your pattern dynamic that keeps paying. It's like, coach, this is my favorite route. Guys, it's my favorite route. It's what I built my career on. Great. But you need to understand when you've got some frustrating factors out there on the field. Absolutely. You need to understand when you show up to run your route and boom, 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 quarterback is there. 62 yards down the sideline and whoa, whoa, whoa. You just ran into a bunch of congestion on the field. At least know what you're running your route into. You have to be prepared for that. So not always, I don't want to just say consistently be on offense or defense. Always, don't get into the backfield. Don't get into all that. We have had plenty of patterns that have been clean sailing, just you and me on the football field on a Saturday. Boom, 62 yards and straight in, run for a touchdown. You guys know it's been nice. Understand when you're deploying your technicals. Understand when you are looking at your specific indicators, your oscillators. You guys know this. When you're looking at your indicators, where do you have an expectation of a pickup? Right? Where do you have a real nice, strong indication here and you're being given some guidance through whatever technical means you can? All right? Do this. As you look at a level of resistance and a carry down into a level of support, and well, the bulls are picking up on this level. The strongest bulls, at least, are going to be picking up at this level, right? This is a route they usually take. This is them showing up on a Saturday, and it's going to be a pass on the football field. Contested, they've got a fallback provision. They do. But the strongest bulls are going to be in the market for, say, a move like this. Wham, to the upside. From that specific level of resistance, carry parallel down here, boom. That's a nice weekend for a lot of bulls. That's a nice time to go. There's nobody else really on the field. Yeah, you got a backup squad. It's going to show up tomorrow if we can't put it together. We show up on the football field on a Saturday. If we just can't put this together, I'm telling you, right? It's like I got the arm, I got the ball, you got the route, let's throw this. And like all day long, for some reason, we just couldn't put this route together. It's a route we've run before, right? That's why the bulls, we say the most aggressive bulls are going to show up on this parallel carry down from the resistance to support, right? Now, in the context here of notice, and you don't have to give up, but have a bit of respect for the game in terms of trading. Have a bit of respect for the game as you at least look at a tendency to pick up at a preceding level of support. Because while your favorite route may be an expansion pattern here, it may be the one that's just been paying like magic, right? 72% of the time is hard to beat. It just is. But that's your route. That's the one that's been paying. When it's in a clean, uncontroverted zone, guys, when there's like no defense on the field. There's literally no defense on the field. We're sitting here trying to score a touchdown. There's no defense at all. Multiple times in this zone, we've had no defense. Like we're sitting there trying to score touchdowns. There's no defense. There's no defense on the field. We can do this. You guys got it. So we have that defensive shield up right now a bit. We have a failed bullish pattern a bit. Now, we dig into the technicals. We look at the tendencies and the patterns in play. Bitcoin loves to pick up at a preceding pivot to the left. Loves to, right? It's not that there's not a touchdown in play, but as you were to look at your higher producing patterns, your routes that have been achieving touchdowns for you the entirety of the way, and I'll just bring up this preceding one here. Nice pattern, multiple patterns in play here from that preceding. And I'll just tell you, anytime you have a descending triangle, what's interesting about them is the number of limited number of times that a descending triangle, pay attention to this, guys, hope you're having a good morning, but the number of times that your descending triangle wants to really produce and just be the last pattern on the map, and it's just a free fall from there, boom, all the way down, very limited in terms of those percentage probabilities. They can outperform a bit, but we look for a recoup back into that flat bottom support. We just do. We love to trade. Traders get very interested underneath. Longs, bulls get very interested underneath a descending triangle. We love that recoup play. We call them blackjacks, right? That double bottom single pass through. We trade them all the time, right? And in addition to that descending triangle, it's just based on probabilities, guys. And some of these probabilities you haven't had this level of probability to rely upon. You haven't had them for decades and generations. You haven't had them. So when we talk about Bulkowski, we talk about the Encyclopedia of Chart Patterns or some other frameworks that things have been put into. You haven't had these for decades to rely upon. It's a new synthesis in terms of that empirical data set that we are pleased to be able to rely on. So understand when you have that free and clear sign. You guys got it. Understand when you have some congestion on the football field, right? It's a clean, clear, sunny day, right? We have a pattern on the map. Let's get out there on the football field. No one's there. I just reinforced it. No one's there. It's you and me with a football, kid. I'm going to drop back. Wham! 62 yards in the air and then catch. We could do that all Saturday long, man. We can do it all Saturday long. This a little different. This, we're showing up. We got some congestion and some competition on the football field. You guys agree? Yeah. Know when we're not going to put all the eggs in one basket. Okay. We're not going to just say, well, the whole season, let's make a bet, huh? Come on, guys. Listen up. I'm going to make a bet. We're going to go out there on a congested football field on a crazy field day, and we're going to make a bet saying, oh, no, let's do this. I'm going to bet you I can run a clean route to the outside with 2,000 kids on a football field. I can run a clean route, full speed. You're going to launch it 62 yards in the air. We're going to score a touchdown. I'm going to put my money somewhere else. I'll bet you that on a Saturday. On a clean Saturday, we get out there, we run the same route. I throw the same pass, 62 yards. We're going to win on a clean, uncontested day at the football field. You guys know that. So that's that is the notion that I wanted to cover today, particularly how your patterns are going to play into the signals that you get on the indicators. Just on your indicators, you're overbought, you're oversold. Does your even oversold on your RSI, does it like to double dip down to a further level? Does it like to double dip down to another level? Why, right? Start to explore the price patterning, start to incorporate that into your trading, and the further you get along that next level of analysis and not relying on your indicator as a solo buy sell in a vacuum, whether it be Fire and Ice, whether it be our custom indicator that caught the bottom of Bitcoin, whether it be RSI, or whether it be a hybrid solution like our MACD. I'm going to encourage you to continually pay attention to the level of congestion on the field. This is clear sailing and nothing but the blue sky and the sun up above. Let's go play some football and score all day long. Or is there a little congestion on the field, guys? This is London. Wanted to come to you with that as we prepare for the FOMC meeting. I just tell you right now, as we have a bit of congestion on the field, let's take a closer look in the back, do that second level of analysis. And I want you guys to be great. I want you to show up like heroes, right? Absolutely on the field. And it's not going to be in a vacuum, relying on your indicators. The more that you work with your indicators, the more volume that you get in terms of your trade volume. You guys know the more trades that you repeat, the better you're going to be in the market. Something that the lazy crew in the market that wants to show up with the hype is not really the right answer the majority of the times in the market. So we appreciate the hard work you're doing, and we're excited about 2023. We will be in the back in just a stream I wanted to bring to you guys, which is on my mind to bring it to you as we look at this bullish pattern in the pour down here. Just incorporate those patterns into your technical signals. We will be in the back, and I am hard at work with our development team. Always hard at work with the development team to bring you some additional features and to really further refine our approach in the markets. Yep. Look at that 30-minute right now, which has been a commanding time frame. And one of the issues, one of the difficulties is that a time frame, and we'll end on this, a time frame will show up as relevant. For instance, on the 30-minute, the cleanest look at the flat top resistance is now on the 30-minute time frame. It will show up with a degree of relevance, and it will challenge you on both its indicator sets and its additional patterning as to whether or not it will remain or whether or not it will be a controlling element for you in the market, right? And this is a great question to ask yourself. The 30-minute will show up with a powerful flat top resistance, best time frame that has shown up on any time frame will be that 30-minute right now with the most controlling feature of the flat top resistance. And as you assess that, the dynamics of the market which challenge the traders are the questions which essentially are the following. It will be, okay, we have shown up, and the question presented is a flat top resistance, a powerful flat top resistance, clearly demonstrated, most clearly demonstrated on the 30-minute time frame. So the variable approach will include the question, the analytical question as, does that mean, right? Does that mean that the 30-minute can be relied upon in terms of a support hit to the downside? Does it mean that that's the appropriate pattern, let's say time frame to judge the pattern framework? Guys, if you have a clean flat top resistance and an ascending line of support, I'm going to say yes. In terms of forgetting the other time frames, no. But in terms of the assessment of the pattern framework, what you don't want to be is inconsistent. If the 30 minutes is presenting a strong pattern to you, you're going to assess and you're going to consider the entirety of the preceding, let's say how reliable the 30-minute has been over the last several months. We know that information because we trade a lot. But in terms of the pattern interplay on the 30 minutes, you can't hop, skip, and jump over to the hourly for the support pickup if you don't have the clean flat top. Or let's say the 4 hourly, by example only, let's say the 4 hourly support pickup. If we have less of a flat top feature here, let's look into the hourly. And it's really, I said by example only because it's relatively consistent here on the hourly, though not as consistent as that 30-minute time frame. You see the 30-minute is a controlling time frame right now. That's highly relevant. So as you get to know the advice, buddy to buddy on the football field on the weekend, me saying to you, look, what I've seen over the last few months, and we've been coming out here with different traders, different wide receivers, is this, right? Let's say the 30-minute, in terms of its applicability, if it's giving you the clean pattern, you need to stick with it. You need to stick with it right now and trade that 30-minute. That's going to be relevant as you look at your patterns on the 5-minute, 3-minute, 1-minute, 15-second, 5-second. The level of overall consistency that the pattern, or that the time frame rather, is going to give you, the level of consistency that the time frame is going to give you, this is not light stuff, but is going to be something that you're going to gauge and you're going to be able to comment on very quickly in the market. You'll be able to say, this has taken a number of days here. This has taken, as we were to look at this has taken less than a week to play out at the 30 minutes. I always tell you, the 30-minute can be your friend or foe. I say that because we've seen it be very friendly on the technicals or operate as nearly an enemy in terms of presenting a bullish pattern with a bearish result. You guys know that. So as we were to look at those dynamics, I just want you to not operate illogically in the market. I want you to always consider on all your relevant time frames, try and do too much work, technical work as you can. As you practice the application of your patterns, try and do too much technical work. Try and do an assessment, the 30-minute differential from the hourly at least, the 4-hourly at least, the daily at least. Try and get yourself 4 to 5 time frames. If it seems like too much work, try and do it. Try and assess all the patterns, which is the most conformant pattern time frame for the patterns in play. You can clearly see on the 30-minute, this has been the most conformant pattern. How is that relevant? It's relevant because we would have a specific target to the downside on a perfectly conformant, guys, or even one with some variability. But look at this 30-minute time frame. Look at the target to the downside on the 30-minute. Now, it becomes relevant because we have, let's say, a target set and percentage probability fractional completions, right? A fractional probability completion, meaning a percentage of time we're going to reach the amplitude move to the downside of an ascending triangulation, flat top resistance, ascending line of support. So there's an expectation in the market right now based on the 30-minute time frame of a completion down to this level of support. What's the support level again? That support level again, if we go to the 4-hourly or the 8-hourly or the daily, is that carry down feature. So that 30-minute is providing that window of time. And guys, I'll just say it hasn't been. It's just approach it with caution. The more that you trade, the more trades you get under your belt with the 30-minute time frame. And Flaz, this is one of the reasons that we say on the 100 rounds to execute a multiplicity of trades, to execute those 100 trades, to get that volume underneath your belt. This is a great example as to why I will say the 30-minute can be friend or foe, right? In your 100 rounds, you're going to start working with and evaluating the 30-minute along with the hourly, along with the 4-hourly, along with the 15-minute, 5-minute. Each of these time frames is going to start to mean something to you, right? To where you may start to look at a completion percentage to the downside of a 100% completion to the downside in terms of that level of support. And you'll start to say, the 30 minutes and last not just week, but as you do your 100 rounds, you say, well, really the last several months. And when you have that level of experience underneath your belt, you're going to start to know, well, I'm comfortable trading a breakdown on the 30 minutes. You're going to say very soon, Flaz, very soon, within a month or so, I'm comfortable trading a breakdown of an ascending triangle to the 50% level. So let me get my Fibonacci extension out. Let me get my Fibonacci trend-based extension. Let's measure from the high to the low, and let's bring up to the point of breakout. I'm comfortable operating at a maximum, let's say to 23,530 on the 30-minute, but no further. You may draw the line quickly in the sand after 1 month of trading 100 rounds and say, based upon the last month and your involvement in the market, I'm just not going to give full credence to this level. For instance, it's a for instance, but it's critically important that you be able to make these evaluations. To the same extent, don't overcomplicate. Actually simplify the approach with your indicators. How do you do that? By incorporating the price action elements in play and the patterns in play. You're going to further simplify. You're going to simplify your working with the indicator. You won't see the right and wrong, the hit or the miss, the valid or invalid necessarily on your indicators anymore. You'll start to see you'll see a failure on, let's say, to deliver a proper buy signal in the context of a bearish pattern. You'll start to see some more comprehensive information if you just will challenge yourself just a bit, right? Just a touch. If you will increase that level of understanding in the market. It's a slightly more complicated approach, but the more that you delve into those, I'm going to say not that you delve into the complications, but the more comprehensive approach, expect yourself to deliver in the form of positive trades. Expect yourself to deliver more positive trades. It's why we're here. We're spending time, a little bit more of a, not just comprehensive, let's say, a little bit of a more dignified potential participation in the market than just helter-skelter. The sky is the limit. Let's just, let's go out, and anytime I see a signal, I'm trading. Get the pattern involved. Get the pattern involved. Get the time frame involved. Go that extra route. You're all capable of doing it. It's the #1 trade group. I know because we do it all day long. This is London. We're going to be looking forward to the FOMC meeting. Be prepared again for volatility. And I would just say this, for those of you trading on the ultra micro, I'm excited to continue to see what you're capable of. We are pushing down to preceding, understand on Bitcoin, anytime that you're going down to a preceding level of support or to a preceding prior pivot to the left, just be prepared for such hits. Some people are only trading these hits. Some people are literally only trading and are waiting at the pre-existing pivots, guys, to the left. This is London. We'll talk to you guys soon. Thank you so much for paying attention. We may address this issue a few different times in terms of indicators overall, how to rely on them, because traders always want the quick and easy. They always want it's over, sold, I'm buying. Do you know what you're buying into? Do you know what pattern you're buying into? Assess the pattern that you're buying into. Is it a pattern that you would want to delve into the micro? Go from the 4 hourly and, well, now I really want the best possible entry possible. I'm going to go to the 5 minute. I'm going to go to the 3 minute or the 1 minute or the 15 second even. Let's say I have a 5 minute pattern. I'm going to dig into the lower time frames and find that ultra nice entry, right? Maximizing my participation in the market is something we'll continue to focus on, potentially the residual of this week as we try and master these specific elements in play. This is London. Thank you, guys. We'll be in the back trading. And, guys, take care of yourself. And what do we got? FOMC. Do the Fed have teeth? I bet they still have teeth. Let's watch it play out. We'll talk to you soon. Take care. Bye-bye.